Did you know that you lose thousands of dollars during the home buying process before you even get the keys? Today we're talking about one of the biggest risks and one of the biggest potential tools that most buyers don't understand, the earnest money deposit.
And it is completely avoidable. We are going to show you how you can lose it, how to use it, and how to protect it.
Awesome, here we go.
Hey everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and today we are deep diving into the earnest money deposit.
Yes, so let's talk about what is it? What is the earnest money deposit? Well, that's exactly it. It's a good faith deposit that shows the seller that you mean what you say, that you are dedicated to closing on this property, so they don't feel like they're taking it off the market for no reason, just to come back on in a couple of weeks when you change your mind.
That's right. And what a lot of buyers don't understand is that it's actually not an extra cost. It is a deposit towards the transaction cost, so your closing costs, your down payment, this is a credit towards it, so it is not an extra expense.
Right.
Yep.
That's exactly it.
When's it due?
It's due usually 3 to 5 business days after the date of ratification.
Okay.
So you need to make sure you're liquid while you're doing the home shopping, because as soon as you submit an offer, your agent submits an offer for you, if that seller ratifies, there's going to be a line item in there that says when you have to make that deposit and how much that deposit is. And it's business days, thank goodness.
Yep. So,
Yeah,
okay.
It's typically 3 to 5 days, so you need to be liquid with that.
That's right. So where does it go? So it goes to either the title company or the brokerage. There are strategic reasons, depending on what brokerage your agent's with, but typically I'd say 75-80% of the time, it's going to go to the title company.
And it's an escrow account, no one is allowed to touch it. So the seller, no one can make a claim without all parties to the contract agreeing. And by parties, I mean the seller and the buyer,
That's
not
right.
the agents or anything like that.
Yep. So it is protected. It sits in a neutral account. Just a quick overview, the title company in Virginia is the company that represents the transaction, not the buyer, not the seller. So they handle all of the neutral funds. They handle basically everything and all the legal filings. So your money is protected. It does not go to the seller.
Exactly.
That's right. Okay. All right. So yes. You can absolutely.
So we're going to talk about that. We're going to talk about when it can go to the seller, which is in the how you can lose it phase. And I would like to start with situation 1, please.
Before we do that, may I say something?
Sure.
I'm going to interject. So in everything that we're about to go through, there are 2 things that can happen with a buyer that a seller can enforce on a buyer for any of these reasons we're about to go through. First thing is they can make a claim to the earnest money deposit. If they do that and they take the earnest money deposit, that releases the buyer from all obligations in the contract. The other option is they can leave the earnest money deposit and sue the buyer for damages. So this conversation is about earnest money, but it is not the limit of your risk. So you need to make sure you understand all of that.
Exactly.
And we're speaking specifically in Virginia, but this does apply in most states.
Yeah, and what he means by leave the earnest money deposit and sue for damages, it's not like leave it with you and I'm going to see you later. It's leave it in that escrow account so nobody gets to touch it until all the litigation is over.
That's right. Okay, so what's
Now
the first
may I?
situation? Yes.
Okay, missing contingency deadlines. This is so huge. You as buyers, if you're not licensed agents, realtors, you don't know all the ins and outs of your contract. All states are different. It's not just the day deadlines that are put into effect, but in the contract, different things have business day deadlines, different things have calendar day deadlines, different states have, does it end at midnight? Does it end at 9 p.m.? You're not expected to know all of this. Your agent is.
That's right.
We know we need to keep you up to date. So I'm talking about.
What is a contingency and which contingency are you talking about?
I'm about to say all this.
Okay, go for it.
So your inspections, and that's not just making sure your inspection is done by the deadline, completed, but you need to have your response to that inspection turned in by the deadline. So let's say, for example, the inspection was completed and it's like, okay, we're gonna have to put a $20,000 roof on in the next 5 years. That might be something that makes you think, I don't really want to do this with the property. And so the deadline would be, your agent needs to inform the seller's agent that we're pulling out, my buyer's pulling out because of the inspection contingency deadline.
Yeah.
So it's not just the performance and completion of these inspections, it's your response
It's
to
the
them.
notice, that's right.
So it's the inspection, financing. I'm going to go into how you don't miss your financing deadline later. Your appraisal is another big deal. If it appraises under value, it's not just having it completed, it's not just delivering the report, it's also you saying, I don't wanna move forward.
Yep.
Right? And then a big one that I think gets so overlooked is
This is huge.
the document review period. So
HOA or condo documents.
I'm about to say
I
this,
know
thank
that.
you.
I just was so quiet for so long.
Well, do you wanna say more?
No, go. I
Okay.
get this.
It's overlooked.
Actually, I do.
Go.
So talking about the financing and the appraisal deadlines, your lender that you pick really matters.
You're backtracking.
I am, but you have to go back to this a little bit. This is important. So, for example, your lender has no fiduciary responsibility to you, which means that they are responsible for helping you get a loan, but they're not responsible for your contract deadlines. And we've had situations with lenders out of state. For example, in New York, all contract deadlines are recommended. Our understanding. We're not licensed up there, but that's our understanding. So we've had lenders in New York that have made no effort to meet these deadlines, and we've had to go.
And they tell
to-
us, well, up here, it's,
Yeah.
you know, it's just kind of a recommendation, it doesn't mean anything, and we're thinking, read the motherfucking
You're-
Virginia contract,
That's
it
right.
means something.
That's right. So your lender
Um,
matters, and having a local lender is very, very important.
And being able to throw the MF bomb at a New York agent
That's
is also
right.
very
Yeah,
important.
because that's how you
I would
blind.
not do that to a southern.
That's how you blind. So go into the HOA. Talk about
Okay,
this.
the
This is
HOA,
important.
this is very important,
Yes,
thank you for
you're very
getting back to
welcome.
this. So, picture this, right? In your HOA docs, it says things like, okay, what we allow and don't allow in our condo association or in our homeowners association. So maybe you don't have a junker car that you wanna keep on your blocks, you're not worried about that. But what if you have a beautiful 75-pound dog who's a part of your family?
Has
Mike.
been for like 10 years.
Mike is the best.
The kids
Mike,
love Mike.
like Mike is
Mhm.
like Nana on Peter Pan, right? And you don't read your HOA docs to the fullest. You have an agent who just says, here they are, go through it. Your 3 days starts now, and then it expires, and they don't read it. They don't know how much you love Mike. 3 days goes by, and then later at settlement, you realize,
Or right before settlement.
true that,
Yes.
right before settlement, you realize that their pound limit is 25 pounds or 40 pounds, and so what are you gonna do? Right?
You
Are
give
you
up
gonna
Mike.
lose your $25,000 earnest money deposit, or are you gonna lose Mike? That's
Yeah.
a tough call
That
for
is
a
a tough
family
call.
to make,
Yeah, yeah.
right?
So you gotta have an agent that understands these things and really dives into the details with you, and you have to dive into the details too. If you didn't tell your agent that Mike is a part of your family and your agent's never been to your home, your agent's gonna review for the things they're looking
Yeah.
for, but they don't know all the things that are important. So it's very
We do have
important
to-
for communication.
We had someone who, for his profession, he had I think it was a work van that
Yeah.
was decaled, it was beautiful, like it
Yes.
was really
Another-
amazing, but it
another
had
great
his
example.
work logo on it, and the HOA rules in this community, that was not allowed to be
Couldn't
parked,
park.
and like, it had to, if it was garaged, fine. But the one they were looking at did not have a garage,
That's
so, these things are important, if it can be garaged, and there is a garage, well, what's the height? How big is your van? Does your garage, is it gonna fit it? Is it gonna house it? All of these things are very important on the condo docs.
Yep.
HOA docs, don't overlook that.
That's right.
Situation 2,
Situation number 2, walking away because you changed your mind. My parents didn't like the house.
that happened.
I'm nervous. Oh, people get nervous.
That
Yes, we had that, and I had to talk this buyer down. It was crazy. I found another property. So we just had an example with a buyer that she is going through a divorce. She had a very limited timeline when she had to leave her home. She found a property that needed renovations. She had enough money for the renovations, put the offer in, no contingencies because she really wanted it, quick close. 2 days later, she found a property that was fully renovated that she wanted instead. She asked me if she could void the contract. I told her this is not an accepted reason. None of these are accepted reasons. I can communicate with the seller's
Yeah, there was
agent.
nothing we could do.
Yeah, so I can communicate with the seller's agent and see if the seller would be willing to release you for only the cost of the earnest money, not for suing for damages. The seller was willing to release her. She got out of the contract, bought the new property, he got the earnest money.
But it's not everybody that has, I think it was $10,000 in this situation. Not everybody has a $10,000
That's right.
thing that they can just pay to walk away and move on to something
That's
else,
right. So cold feet, somebody not liking it. I think we're gonna go into this in a minute, but I'm going to go into it now.
Okay.
We had a listing. It was in Arlington, $1 million listing. Gentleman walks in on the first day, loves the property, puts down a no contingency cash offer with a $50,000 earnest money deposit, delivers the
Like
earnest
we
money
give
deposit.
all of the warnings, right?
Yes.
Like this is done, no content, are
Yeah.
you sure
Yeah,
this is
and
it?
we did not represent the buyer. The buyer had another agent. We represented the seller.
Right,
So the seller then brings his wife in 3 days later after depositing the earnest money, and the wife did not like the size of the bedrooms. So the seller's agent calls us and says, "Hey, will your buyer let him out of the or will your seller let him out of the contract for the $50,000 earnest money without suing for damages?" Of course, he let him out, got the $50,000. So I don't like the size of the
$50,000.
bedroom. So the lesson is always
Show
show
your
your wife.
show your wife the house.
That's
I
right.
don't know if the same would be true, like should wives show their husband or?
100%. Oh, 100%. I've seen it on both sides. You never know who the picky one is. Absolutely.
Okay,
Yeah,
fair.
absolutely. Okay, situation number 3.
Okay, I wanna talk about this, waiving those contingencies. I think I'm like the contingency queen here.
Yes.
So all of those that I went through, your finance, your appraisal, inspection, what you can get, wood destroying pests, it's all kinds of
Waiving the
stuff.
contingency
Any
of
your-
the HOA docs.
Of
all
the
that.
HOA docs, you
Yep.
can do that, say that you're not gonna have that. Don't do that.
Or if you do it, make sure you understand
I
all of
was-
the risks.
I was getting to that.
Like, a lot of people have to waive them to get the
Why,
properties.
I know, I'm getting to that. Am I too slow for you today?
Yes.
Okay, we even have a document, adverse consequences. It says, hey, you understand, you're waiving this, blah, 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 and you're not protected from any of these contingencies if you waive it. But that's in place because it's a very, very huge tool to help you win a deal, right?
Yes.
If a seller sees that you're waiving all contingencies and you have this EMD that you're willing to give up, it tells them, okay, they really mean it,
Mhm.
and they're not gonna walk away for any of these weird reasons. I'm not gonna have to go back on the market.
Yep.
That's huge for sellers.
That's exactly right.
Okay, Sean.
Okay, now
I'm
I
gonna
get
interrupt
to
you
go.
this time.
Okay, I'll let you
Can't
know. Okay, situation number 4, failing to perform. So this means.
Oh, I could talk about you failing to perform.
Anyway.
I didn't mean that.
Yes, yeah, right. Like, wait a minute. You didn't tell me that
I didn't mean
earlier.
that.
Okay.
That did not
we're
even
gonna
occur
talk.
to me.
We're gonna.
You
We're
know what,
going.
King,
We're
that
gonna,
did not even occur to me.
we're gonna fix this later. Okay. Number 1, the biggest failure to perform is going into default, which means you don't go to settlement, and it's for any reason outside of your contingencies. But there are other nuances that could happen. You could
Like not applying for your loan,
not
for
apply for your
example.
loan, yeah, or not apply. You
And
just
what do you mean?
interrupted.
What do you mean by, I know I did that on purpose. What do we mean by not applying for your loan, right? We've been through it before, you can't submit an offer without your pre-approval, so you might think you've applied for your loan, that's true, but your lender is gonna come up with other things, and so that qualifies in that loan.
Yes, yeah, an actual
Go
loan
ahead,
application.
Tony. Go.
And applying for your homeowner's insurance. In the contract, it specifically gives you a deadline for loan application and homeowner's insurance applications. And one of the problems with the homeowner's insurance, if you don't apply in time, and then you end up getting a denial for your finance contingency, but it's based on homeowner's insurance, a savvy seller's agent will ask for proof that you applied for that on time, because that can negate your finance contingency.
Right.
Or if you end up going to a point where you just don't go to settlement because now you can't get financing because of.
The dumbest one is missing settlement altogether. So this is kind of like what there's a child that I'm aware of, may or may not be one of ours,
Mhm.
but he or she seems to think now that he or she is an adult, that if they don't open their mail that
It doesn't
says that
apply.
payments are due, then she's not responsible for making the payment
That's
because
right.
she had no idea. I mean, he or she had no idea. And it doesn't work like that. You
Yeah.
don't just get to wake up, know that settlement is supposed to occur at noon on Friday, and it's Friday, and you're like,
I
I'm
don't
gonna
think
go
I'm
to
gonna
the
make
beach
it.
instead.
Yep.
Or I overslept, sorry.
Yep.
It doesn't work like that, no.
So, and if you do that, that's called default, which I covered earlier.
But you
Okay.
didn't specifically say missing settlement, because even 18-year-olds can buy houses. I mean, if this person is like 18, and our child and a female.
Thank God this is on video so we can look back at it. Okay,
This
so.
is hypothetical.
Yes. So now we have talked about how you can lose it, but now how can you use it? How can you, like, there's risk here, but you can actually use this as a strong tool when you're putting in offers.
Oh, yeah, it's
Yeah.
definitely a tool.
So one of my favorite ways is you give a significant earnest money deposit, especially if you have protections in place, because when a seller sees that earnest money deposit being high, it will put you a little bit higher up compared to other offers with lower EMDs. And another option is you can actually do a non-refundable earnest money deposit, which means that the seller gets it if you don't perform for any reason.
You've got to mean it though.
Highly risky, but
But it
if
is
you're
a tool.
strategic and you want the house and you understand everything and your agent's looking out for you, it's a great tool that you can use.
It's true. If it's a
Yeah.
hot property, it's new to the market. I just heard that in Fairfax County, the property prices increased 5%.
5.5. That's what I found in my
Why do you
numbers.
always have to try to one up me? It was
Because-
actually 5.42.
Because you're smarter than me, so I have to show off a little bit.
It
But yeah,
wasn't- I don't know that it was 5.42.
they went up 5.5% year over year for June. So yeah.
Okay. And you know what? I don't even know why I started coming back to do this with you.
I'm in trouble. Failure
Okay,
to
let's talk about how we
perform
protect
tonight.
it. You're gonna be failing to perform.
All right, how do you protect it? First thing is know your contract deadlines, your contract dates.
All of your contingency
All of your
deadlines.
contingency
Or have a
deadlines.
really amazing agent who knows that for you.
That's right. Yeah, you as a buyer really shouldn't be worrying about these things. You just need to follow the direction of your agent, assuming your agent knows. This is why you don't go with an agent that just got their license, because they may not understand all the nuances.
Okay, and if you're an agent who just got your license, hook up,
With a
go
senior agent.
team up. I don't mean join a team, but I mean be a co-agent with someone who knows what they're doing, or get a mentor or a coach. Because, I mean, everybody's new at something sometimes.
Fair point. That was not a knock on new agents. We were new agents at one time, but new agents do have mentors that should be looking out for them, so make sure they have that in place.
Yeah,
So,
exactly.
Okay, all right.
Also, stay in very, very close contact with your lender. It's your agent's job also to stay in close contact with the lender, which
Yeah.
goes to your point. And it starts not only with your pre-approval, but also as soon as your contract is ratified, you need to pay for your appraisal, because they cannot order the appraisal and get that scheduled and on the books until you've paid for it. That's one of the very few fees that come out
Yeah.
prior to closing. So your earnest money deposit, your appraisal fee, if you're doing an inspection, you're gonna have to pay for that. Those are the things off the top of my head that would come out immediately.
Yep.
Not
Next,
very many.
next tip is don't waive your protections unless you understand it, unless your agent's fully given you the risk profile, everything that could happen. Make sure you understand it fully. Don't just be willy-nilly trusting the universe and everything. Make sure you understand the risk that you're taking. It can be
You're
very
in my
strategic.
universe now.
That's right. It can be very, very beneficial to use this strategically, but just make sure you understand fully. Yep.
Okay, so again, work with an experienced realtor who keeps track of every deadline. Yeah, that's what we do. I mean, our job isn't just to find you the right house, it's to protect your money and your investment, and
Yep.
we do that even after you've purchased.
That's right. That's right. I want to go into a quick story. May I?
Do it.
Okay.
Wait, what's it gonna be about?
This is going to be about.
Ooh.
Yes.
I know which one.
Yep.
Yeah.
So we represented a seller. I'm not going to go into great detail. We've done a whole video on this transaction, but we represented this seller, and the seller, the buyer. So we represented the person selling the house that owned it. The buyer was coming in with an all-cash offer. We went through the whole process. The buyer actually moved into the property early. Whole bunch of stuff. Everything's going great. We go to the settlement table. Seller signs his settlement documents. We see the buyers in the elevator. They're coming up to sign their documents. We leave. They sign their documents. Everybody's happy. Transaction's done, theoretically. That was a Friday afternoon. We got an email from the title company at 5:03 p.m. that day. Remember this like it was yesterday, even though it's been a couple years. 5:03 p.m. that the funds did not arrive. Long story short, this was a cash offer, but it was a cash offer where the seller or the buyer was liquidating funds and bringing them in from, I guess, investment accounts.
Yeah.
And the feds grabbed it. So another way that you have to really make sure that your earnest money deposit is protected is get that money in soon. Don't let it get delayed. We've had 2 contracts where the money coming into the transfer, which should take a matter of a few minutes, gets held up by the Federal Reserve and it doesn't make it. So then you have to go into negotiations and so on with that. So just make sure that you get that money.
Right, and that
early.
goes into, and if you do have a lender, obviously if it's cash, that you do it
Yeah.
ASAP, but
Yep.
if you have a lender who's working with you and they say, hey, our underwriter, they need you to start working on the transfer now, and you think, oh, it's not due for another 2 weeks, I've got time. They know what can happen, so make sure you're doing it immediately so that, you do have that time if something happens, that
That's right.
it can all be okay, because then the seller can say, sorry, you didn't actually settle even though you signed your documents, we're gonna take your $50,000 earnest money
That's
deposit
right.
and move on and sell it to someone else,
Yep.
and
Yep,
we'll
that's
be
right.
great.
That's right.
So the earnest money deposit is a huge tool that you have. You need to work with an agent who can show you how to use it, make sure you don't lose it, and teach you how to protect it.
That's right,
Which is
that's
the same
right.
as don't lose it.
So,
It's a little bit redundant.
so reach out to us if you have any questions, 703-783-2143. As a buyer, we're happy to walk through the process with you and help you come up with a strategy. As a seller, same, just whatever your situation is.
As a seller, don't just see like the earnest money deposit doesn't mean anything. It's significant based
Yeah.
on the price of your house and all kinds of things. It's significant on what you should be willing
That's
to accept.
very,
So
very, very
reach
good
out to
point.
us on that too.
Very good point. All right, guys, we'll see y'all next week. Okay, so it's time to switch gears and dive into this week's Real Talk Market Snapshot. What's happened in the Northern Virginia real estate market in the last 7 days, and in under 5 minutes, possibly as much as 10 minutes, because we're going to dive into what the contracts have looked like as well. It's going to be quite surprising this week because we are coming off of the 4th of July weekend. This is our first weekend back. And there was some interesting activity that happened. So let's dive into this and show you exactly what's going on and exactly what you need to expect this weekend going out into the market. So you can see, as always, that our black line here is our buyer activity. This was the 4th of July weekend. You can see there was a huge dip in buyer activity, and you can see we had a simultaneously huge dip in inventory or supply. So supply dipped and demand dipped. That was July 4th weekend, which was last weekend. So now we're back into the market after July 4th, and look at this influx of inventory. Inventory just spiked really, really high. In fact, this is where inventory is this year at this time. This is where it was last year, so it's even higher than it was last year. But buyer activity did not match that. Buyer activity went up, but it didn't match it. So buyer activity is actually a little bit lower. Here's where it was last year, here's where it is this year. It's a minutia, just a little bit lower. So what this tells me is that this last 10 days with school getting out, with 4th of July weekend, it's almost like the summer lull hit a little bit early. And so buyers, this could be a great window for you. Sellers are still getting top market value. There's a townhouse in Reston, Virginia that we just put an offer in for a client of ours. That one's going above asking price. But realistically, it's only going above asking price by a number that I expected it to go higher, and it was listed to bring in multiple offers, and only brought in 3 offers. So it's still a seller's market. Sellers are still getting top dollar, but it's not as much of a seller's market to where buyers are having to be chaotic and having to just throw money at properties. They have a lot of choices, especially right now. You can see all this inventory here that buyers actually have quite a few choices. So this graph alone tells us that buyers, it's a pretty fair market. You just need to be strategic with what you're looking at. And sellers, it's really, really important that you put your best foot forward when you're putting your property on the market, especially if you're trying to get top market value. If you're just trying to get rid of the property and get rid of it quickly, it's absolutely fine. Just price it appropriately, because properties are staying on the market a little bit longer, and buyers are having choices. So it's not just that you can just put it on the market and dive in. Now, because of this influx of inventory right here and this delta between inventory and demand, we actually have more inventory than demand, which is very rare for our market lately. So you can see when we come down here to the buyer's market versus seller's market, again, this gray line here is a neutral market. Anything above is a seller's market, anything below is a buyer's market. You can see that we dip pretty significantly into a buyer's market. Now, does that mean the market's crashing? Absolutely not, because if you look at this mark here and you look last year, it did the exact same thing. So we're gonna go back up into that seller's market, but how strongly we go up into it is what we need to watch and see. So that's the important thing here, is that there's a window of opportunity for buyers. It may last into this week, so going into this weekend's market, you may have a little bit of an opportunity there. It may not. I don't know what to tell you there. We only know in hindsight, but this is the closest that you can get to real-time information. So have your realtor be in contact with the seller's agent, find out exactly what's going on with offers, and then on the seller side, be in contact with your realtor and watch what's happening as far as offers coming in and so on. So what do contracts actually look like? Well, you can see that, again, we're looking at Northern Virginia here. So you can see that 35% of the contracts went under contract above the asking price, 29% went at asking price, and 36% went below. So that means that 64% of the properties went at or above asking price. See that 43% of the properties went under contract in 7 days or less, and 22% in 21 days or less. So 65% of the properties went under contract in the first 21 days, and 64% of them went at or above asking price. So those numbers are pretty consistent. We're seeing that, and that 21-day mark is really the mark where we might start seeing price drops needing to occur. Contingencies has been pretty consistent, right around that 60-40 mark. 63% got their finance contingency, 61% got their appraisal contingency here in Northern Virginia, and 66% got their inspection contingency. This is beautiful for buyers because that lets buyers have their protection on the properties. Of this 34% over here, I can almost guarantee you that a majority of those buyers did pre-offer inspection. So buyers are really being protected through these contracts, which is really nice. 80%, 80-20 on cash versus financed, with 80 being financed, 20 being cash. Again, cash buyers, if you are a cash buyer, does not mean you automatically get a discount on the property. Financing spends just as well as cash does, but what it does give you offers the opportunity for is quicker closing, fewer contingencies and so on, because you don't have a lender in the background requiring these things. Seller subsidies, 26% of the contracts had seller subsidies. That's the highest we've seen in I think this whole year. Seller subsidy means that the seller gave something back to the buyer, some kind of credit or something. And then we can see that we have about 94% of the contracts had buyer agent compensation included. So the seller was contributing to buyer agent compensation. So this is a little bit lower than what we've been seeing. We're typically seeing between 97 and 99%. The last 2 weeks we had 95 and this week 94. But still 80% of that compensation is at 2.5% or above. So this still means that sellers, you need to be prepared to contribute to buyer agent compensation. You do not have to, it's fully negotiable. But in a competitive market where buyers have choices, if you're not willing to help them with that, they may push them over to another property where the seller's willing to do that. So that's just something to keep in mind. So all in all, it is a seller's market. I know it dipped down to the buyer's market this week. It's a seller's market overall still, but there's a window of opportunity, and this is we're seeing this. We just had a mastermind meeting. We're seeing this across the board, that it feels like the summer market has kind of kicked in a little bit, and that we're in that little bit of a summer lull. So buyers, if you are considering buying in the next 2 to 6 months, you might want to dive into it and do it now versus waiting, because there could be a little bit of an opportunity. Sellers, it's still a great time to sell because you're still getting top market value, but you've got to put your best foot forward. It's not just throw it on the market and see what sticks. Okay, I hope this makes sense to everybody. If you have any questions, please feel free to reach out. My number is 703-783-2143. Kelly and I are here to help you, whether on the buy side or the sell side, help you navigate the market. All right, we'll talk to you guys next week.